Good afternoon. How are you?
Yeah, hi, I'm well. How are you?
I'm good. I'm good. So us at Green Shift Consulting, we're really thrilled to be here and meeting with you today. Um, I know that we've had a long tenure of consulting for BP Canada, but we're really excited to now be engaging in projects of sustainable finance. So you of course know me, and today I'm excited to really provide you a bit of color on the intersection between BP Canada's sustainable goals and our topic of the day, transition bonds. So I'm just going to go ahead and share my screen. Let me know when you can see it, and we'll go ahead and get started on our agenda for the day.
Yeah, absolutely. And yeah, thank you so much, Sheena. It's great to see you again. Thank you for taking the time for this discussion. And yes, I can see the screen. So essentially, as you know, we're at a crossroads with our financing strategy. Sustainability related bonds have been proposed to fund our shift towards more sustainable energy sources. But before we commit, we need a solid understanding of the benefits, risks, and how this aligns with our goals. So, to be fair, I'm not really sure how these bonds work, but I've promised my board to keep an open mind. But could you give me an overview of what we're discussing?
Yeah, absolutely. So today we'll be discussing the lower cost of financing options available to an oil and gas company such as BP Canada. And ultimately, we do believe that transition bonds are an ideal source of financing. So we will explore the potential benefits for BP Canada, such as the benefits to the risk and reputational impact of the company, as well as investor relations. So BP Canada has embarked on quite an ambitious journey to redefine its role in the energy landscape. By transitioning from a traditional oil and gas company to an integrated energy enterprise focused on sustainability, BP Canada is setting very bold goals to transform its energy portfolio, and as well as cut carbon emissions and align with global climate initiatives. And so we believe that there is a very significant opportunity here to fuel further momentum through the use of transition bonds. And although oil and gas companies have historically lagged in sustainable finance, transition bonds could attract a new type of investor, one who is willing and looking to support real and measurable change over time.
Okay, so I see where you're going, and you're absolutely right. So BP Canada is committed to this transition and recognizes the need for sustainable financing options that align with our goals. And I guess transition bonds could be a very powerful tool. As you know, we've already made strides in renewable investments and carbon reduction. But tapping into this market could accelerate our journey and enhance our credibility as a leader in sustainable energy.
Yeah, that's exactly right. And transition bonds would not only provide BP Canada with a source of capital at potentially lower rates, but would also solidify your commitment to sustainability in the eyes of stakeholders. So, transition bonds are designed specifically for companies like BP Canada and more broadly the oil and gas sector that are committed to shifting their business models towards more sustainable practices, but still operate within the traditional hard to abate industries. So funds that are raised are earmarked for the projects that reduce carbon footprints, but these projects don't necessarily have to be green necessarily. They just have to support the climate transition.
Okay, that's fair, but how are these transition bonds different from other bonds?
Yeah, that's a good question. So I think that it's easy to fall into the confusion about all of these different kinds of bonds. So let's quickly compare what type of bonds exist. So regular bonds are general debt without any environmental requirements. Then you have your green bonds, which are funds are specifically for environmentally friendly projects like renewable energy. Then you have your sustainability linked bonds, which tie financial terms to achieving sustainability targets, such as emission cuts, and penalties would apply if these targets aren't met. And finally, we have our transition bonds. So these are designed for high emission industries, funding projects that help companies move from high carbon to low carbon operations.
Okay, but so why not use green bonds?
So while green bonds fund exclusively green projects, transition bonds allow companies in traditionally high emission sectors to finance projects that help to reduce overall emissions, even though they're not entirely green. So, for example, some financing carbon capture or cleaner fuel production would be eligible under transition bonds and might not be eligible under green bonds, depending on your industry and the types of projects you're undertaking. So, some companies in hard to abate sectors have tried using green bonds, but this often attracts a lot of skepticism. So, take Repsol in Spain, for example. They are an oil and gas industry. An oil and gas company that issued a green bond in 2017. And it raised a lot of questions about the alignment with green standards. For BP Canada, operating in a country like Canada that doesn't necessarily have a sustainable finance taxonomy yet, transition bonds would be a strategic first step. They offer a way to demonstrate to investors that meaningful change is underway and allows BP to gradually build credibility in sustainable finance. And so now we like to really show the graph on this slide because we see a great opportunity for the oil and gas sector as well as BP Canada. You'll notice that transition bonds make up a small portion of the total green financing market in 2022. And why is that? Transition bonds are generally a very new practice, but they are gaining in popularity. And so primarily they provide that transparent framework for investors who want to support businesses transitioning to a greener practices. And as you can see in 2024, this has greatly increased due to an uptick in transition bond issuance in Japan. And Japan's commitment to net zero and transforming their manufacturing sector has really spurred transition bonds as a way to facilitate this change.
Okay, but do you think the investors would view these bonds positively?
Well, the perception can vary, but investors might be cautious since the market is still relatively new, and not all transition bonds are perceived equally. However, the good thing is that BP Canada has been clear about its sustainability commitment, and it is important to note that issuing transition bonds could invite scrutiny, given that carbon intensive legacy of the oil and gas sector. And so investors are seeking real and measurable outcomes. And so robust reporting on emission reductions and possibly an independent third party audit would be needed to gain some credibility in this space.
Okay, so that makes sense, but we must balance cost and practicality. So I guess transition bonds could position us as lead in sustainability within our sector. And well, given the scope of our current projects, the question is whether we can deliver the impact investors expect. And another factor is also the financial side. So I've heard that transition bonds might carry a greenium, which means we might secure lower interest rates than traditional bonds, especially as more institutional investors lean towards a sustainability lens. But is the demand high enough for transition bonds to make this feasible?
Yeah, that's a really great question. So, transition bonds are definitely increasing in popularity. And to speak to your question on the greenium, transition bonds can offer coupon rates up to 25 basis points lower than conventional bonds. And so the demand is growing, yes, but it wouldn't be fair to necessarily compare it to green bonds, which have been around for a very long time. So green bonds are a bit more popular, but it's because of their longevity in the market. And so if we market our transition strategy well and demonstrate real commitment, we may attract investors who are looking for this kind of bridge financing. And they're increasingly aware that companies in high emission industries still need capital to transition effectively.
Wait, hang on. So, sorry. Wait, looking at this slide, I see on the left. So, what's happening in the oil and gas sector?
Yes, so in the oil and gas sector, 26% of outstanding transition bonds right now issued in the gas sector as of 2024 are transition bonds. And so this includes Gaitan, which is the UK's largest gas distribution network, which issued the UK's first transition bond. Of course, this is evidence that adoption of transition bonds is growing globally and especially in this oil and gas sector. We'd love to see BP International issue transition bonds in each of the countries it operates in, but I mean, let's focus on Canada for now. And as a further point, there are also environmental risks if we don't issue transition bonds or other sustainable financing solutions. With regulatory pressure on emission targets and public sentiment kind of shifting, traditional financing options could grow limited or more costly over time. Transition bonds signal to the market that BP Canada is serious about evolving its business model.
Mm-hmm. Okay, so what you're saying is that we need to ensure that our projects are actually transformative. And there's a risk if we're perceived as having superficial changes, you could have accusations of greenwashing, and that could really harm BP's brand, especially given the rise in the scrutiny from environmental advocates.
Exactly.
Mm-hmm.
And that kind of brings us to our outline of risks and mitigation. If BP wants to consider transition bonds in the future, reputation is absolutely key here. For BP Canada, the focus should be on transparency, which is ensuring that the funded projects align clearly with decarbonization goals. And by establishing strict metrics and a reporting framework to highlight emission reductions, we would be showing investors that they can drive real and measurable change within a realistic time frame.
Mm-hmm. Okay, so I guess accountability planning is crucial. So maybe we could pilot this with a few high impact projects, show investors the early results, prove we're committed, and then scale up as we demonstrate success.
Yeah, that could work. And we should select projects that are aligned with government policies on emissions to maximize potential support or even subsidies. And Canada might be an exception at this point because we don't have an official taxonomy, but that is in the works. And so it's something to keep an eye on. There's a synergy that we could tap into between regulatory compliance and sustainable financing here.
Okay, so yeah, I suppose we're making progress so far, but let's recap. Transition bonds could provide capital at competitive rates and align us with sustainable finance trends. But the key to success will be transparent, impactful projects backed by robust metrics to avoid reputational risks. Okay, so I guess we'll start by selecting a few pilot projects in BP Canada to prove this model, and I guess maybe that's something we would have to work on.
Yeah, exactly. But as you explore potential projects that you think would be conducive to transition bonds, it would be important to ensure that their alignment aligns with both what's in the works for Canada, but as well other global transition bond requirements, such as what is reported by the ICMA, the UN ECE, as well as OECD and other government and international organizations, as well as the fact that they outline the reporting framework to track and share progress with the shareholders.
Yeah, that's fair. Well, wait, so here's one thing. So transition bonds, they seem nice, but the interest rates in Canada, they are coming down. I think they're at 3.75%. So I'm not really sure that transition bonds would even save us that much money.
That's a valid point. And while interest rates in Canada are currently coming down, transition bonds could still offer a long-term value beyond just the immediate interest savings. These bonds are designed to support sustainable transitions, which can align with our broader ESG goals. Additionally, they might provide more favorable risk-return profiles compared to other fixed income options as the market continues to adjust to these low interest rates. We could also look at the potential benefits from the perspective of diversification and future proofing our portfolio against regulatory or reputational risks in the long run.
Yeah, I think that's a fair rationale. But here's the thing, I've never really heard of a transition bond in Canada. And honestly, I struggle to accept that the broader population of investors would readily accept this. Maybe it's a fad. So shouldn't we stick to more established green frameworks, i.e. green bonds? At least it's looking more promising with the Canadian government, I guess, working on a taxonomy.
Yeah, your skepticism is understandable. However, transition bonds aren't really intended to replace green bonds in any way. They complement them, in fact, by providing an option for industries like oil and gas that are not yet fully sustainable, but are looking to make strides towards the transition. The key differentiator is that transition bonds are designed specifically for companies in carbon intensive sectors, helping them finance their shift towards cleaner technologies without requiring them to fully fully jump into a fully green model right away. And so, while there might be initial skepticism amongst investors, especially around credibility and transparency of these bonds, this could evolve as we see more success stories and clear definitions of what qualifies as transition. And these bonds are gaining traction globally, as we talked about, with increasing institutional interest in financing the transition of high emission sectors. It's also worth noting that many investors are looking for a way to finance real world change in sectors that can't immediately pivot to green models. And if oil and gas can demonstrate a credible transition plan backed by solid metrics, transition bonds could become an important part of our financing strategy, enabling us to secure capital, mitigate long term risks, and align with evolving regulatory standards.
Okay, so you're saying transition bonds should be a forward-looking tool, especially as investor attitudes continue to shift towards more sustainable and responsible investing.
Yep, that's exactly it. And we see great potential in this space and an opportunity for BP Canada to lead the revolution. And into more sustainable practices. So, our recommendation to you, however, is just to keep transition bonds in your back pocket and be ready to launch when Canada develops its taxonomy, as other countries around the world develop their international taxonomy for green financing, and as BP Canada finds that it aligns best with their goals. And so, further, we can use the practices of BP's operations in other countries where there's maybe a more robust taxonomy, like the Singapore Asia taxonomy, to pilot transition bonds and replicate those bonds in Canada. Ultimately, we believe that transition bonds are a viable financing option for BP, but we also acknowledge that the regulations are not yet as robust in Canada, and so some caution should be exercised.
Yeah, wonderful. So yeah, thank you so much, Sheena. So I guess in summary, I'd have to take some of this over to our international operations, but I'm pretty sure that BP Canada will be focusing on keeping an eye on these transition bonds soon. I guess we'll convene once again when we have the project details, as we discussed earlier, and also financial projections for the next 10 years in place. And ultimately, let's make this transition a model for others in our industry. So once again, thank you so much, Sheena.
Thank you as well. It was great talking, and we'll chat soon.
Yeah, absolutely. Thanks again.
Bye.
Yeah, bye.